The calendar, we really have nothing scheduled today, nothing important to be worried about. The speech that Mr. Powell gave was really a non-event. If you want to, check and see what it was all about, you can go back and check here. Forex Live is where I tend to, you know, uh, check just in order to stay in the news. Powell does not comment on monetary policy or the economic outlook, so really nothing happened. And if I go and therefore check my daily schedule, my daily chart, uh, when I look at the daily, if we repeat everything from the ground up like we do every day, we failed to make a higher high. We failed to take over the 7,000 and keep it. And we have made a lower low. And so when I look at that structure on an hourly, the lower low came in not that long ago, about an hour or so ago. And as of then, we've been pushing higher, not to the moon, but instead into resistance. And I mentioned in the group earlier that failure of taking over '07 in the European session and making the lower low instead kind of gives credence to more downside to come. And so I suggested in the group that we'd be selling resistance. And that's what I started to do a little while ago, right around 7 o'clock or so. I started to trade. Up here, having moved up 3 boxes from the low, I took no trades in that first box, but I did trade in box number 2. And so that became my box number 1. In my box number 2, I put my second percent. So now I have 2% at work in 2 boxes, and I'm looking to go lower over time, right? So ultimately, trades in the upper box will be runners. Everything else should be 2 pips, 2 pips, 2 pips. If I go and check my 5-minute chart and start building that ladder that we look at every single day, it will kind of simulate uh, what it is we're going to be attempting to step through over time, right? So I'm just looking to my left. I'm just connecting the dots. I just try to see where the zones are that are meaningful, right? Stuff like this, right? And then by picking up these action points, every time we cross one of these, I have to ask myself, do I want to do something here? Is there something here for me to do? And more often than not, the answer will be yes. If you have clicks to spend, if you haven't spent them all, go ahead. No, this is the place to do it. If you spent all your money and you've done it, respectively in the boxes, then you have to wait. We don't want to borrow, from Peter to pay Paul. This idea that we watch these levels and we react to the levels, that's to get your brain trained into thinking that the next step is where we focus, right? We focus ahead. And so if I sold at the top of the box here, which I did, and I'm already in the profit on those trades, I'm going to keep them running. If I can come out of that upper box there, I'll open a percentage respective to the new space that I'm in, right? So it's 1% per box. I'm just trying to keep it that way. Okay, so when we look at, when we look around for our typical puzzle pieces, today the Treasury, 10-year Treasury is going up, bonds are going up, yields are going down. US dollar right now, the Dixie is at resistance, pushing downward, but we'll see. I'm trying to test to see if it goes higher. And so this is kind of what we're up into. If I do find the top and I do sell somewhere up here at or near the top, ultimately I'm looking for a lower low on the day and maybe somewhere around the 630 mark. That would fulfill a full day of work, right? The full ATR. So somewhere around here. About 75 pips or so, which should be a full daily range. About 79, 80 pips. Right, so I'm just looking to see if we can test in this area here, test that resistance. If we find the resistance what I'm looking for in this zone, I'm looking for something like this to come along and make me money, right? Otherwise, we might be making an outside range, right? We might be trying to do something like that, right? And so we'll find out soon enough. Give us a few minutes and we'll know exactly what we're up against. Right? Ultimately, the structure failed, and so that's kind of what I'm relying on, right? The structure failed to go higher, the price failed to break the structure higher, and we've made a lower low. And so I'm counting on that lower low to mean something. Right? So I spent my 2% in my second box. If I go up into a third box up here, I'll be allowed to spend the percent that's allocated to that box. Right, so we just have to wait a little bit and see what happens next. I'm hoping to leave these up at the top, and if I can go and into box number 3 up at the if I go into my box number 3 up here and spend my percent number 3, I will leave them as runners also. I am thinking that we go down over time, and I am here for a few hours, after this live session. So my outlook is hours into the future. All right. Things are looking good. Looks like we found that resistance we were looking for in that zone. If we go to a 4-hour, which I don't do often, but I do keep it around. I'm just looking at that 38% retracement that we bounced off of yesterday. That was once. Today we're bouncing off of that now, but I don't think it will hold. It kind of expired yesterday, and so yeah, I think we're onto something. We just have to see what happens at 7,000. Right. What have we done so far? 8. I'm waiting to see if I need to spend percent number 3 in box number 3. It's a very light calendar for news, but there's a lot of speakers. There are a lot of Fed speakers on the schedule this week, and that kind of puts we have to take everything with a pinch of salt, right? There's always an ulterior motive, so trade the facts. You're better off. Okay, so this is looking good. Right, in this zone up here where we have that resistance area, we should find resistance right now. And I would expect a a rotation from here. All right, go down to our 5 minutes. See how that ladder is holding up. All right, so if it moves up a little bit higher, it can and probably would try to test around here, and maybe around here, and finally around there. Okay, so having action points, it's a matter of now executing. And if you have the bullets to spend, this gives you an idea. You know, the navigator will tell you there on your map, there's a turn coming up. And if you see that turn coming, you can at least expect, you can anticipate, you can prepare to spend money. You can envision what might need to be done. And that's where we shine, right? We create this alternative just in case it our optimum plan does not work, right? So the alternative is where we create or engineer, spend extra money. We're looking for break even. We're looking for an outcome that is way better than 36 pips. And so it's a measured environment. I'm willing to take risks in this measured space, and I'll be doing it consistently, right? So I spend the same amount of money. The money management is equivalent to the risk management. It's a one for one, right? I'm willing to spend because I have the money, I have the bullets, I have the opportunity, and the goal is the reward, not the risk to reward ratio. And so as long as I'm focusing on the reward, that next step forward, 2 pips, 2 pips, 2 pips, I'm doing the right thing. Right? So I'm just waiting to see if I can spend my percent number 3. I'm really eager to spend money up there. Right? It's the probability that I'm aiming for. Right. Those of you that are following me on the gold trades, if any, now would be a good place to go short again. And yesterday we stopped our shorts right around this level. And so right here, right now, I'm getting back in 1957, just in case you wondered. And on the euro, if you're selling resistance, you probably want to do it right now. Right? I've already spent my money. I put it all up at the top right here. My main objective is consistency. It's really not making millions and millions and millions of pips or millions and millions and millions of dollars. If I can make 10, 20, 50, whatever it is my number is every single day with little to no sweat, I would rather do that and then scale that up, right? The idea is to find what works for you and don't reinvent it. So I'm just so eager to trade up here and beyond. Testing 07. That's probably the intent here, right? And by the time we get there, it would be a nice 4-box move from the bottom. If we get there, we'll see. I did not spend any money in box number 1, and so I have room to spare up at the top. $61. Trying to get in right there. A little bit of patience. You know, if I jump the gun, if I spend the money without the proof, and I'll regret it minutes from now when it's necessary to spend it and I don't have it. So I learned from experience that patience is where the skill is at. You know, the discipline, the patience. It's all the stuff we're so not prepared for. That's why it takes so long. All right, there we go. Beautiful. All right. Slow, steady, boring. Average bar is only 2 pips. At this time of day, it's a little disconcerting. It's boring. You know, it makes you wonder. When there's nothing on the calendar, there's really nothing for us to right? Oil. There's nothing left for us to worry about. It's all oil stuff. Right. So it's a matter now of build your position, spread your risk, and let it play out. Uh, Today feels like it's going to be a slow day. Yeah. I'm also, considering what's happening here, we have to understand where we're wrong, right? So if we do break above 7,000, we have to understand the risk is shifting, and theoretically that'll be our fifth box anyways from the low. So that's, a move beyond average. You have to be thinking twice about, fighting that. Right. So we know what we're up against. We're up against resistance. We know what to do. It's a matter of doing it. And then if we execute and you spend the money as you should, where you should, the probabilities are you'll survive. And even that might earn you money. So, right, it's the name of the game. If you're pushing against time, if time is a problem for you, you have a day job or something, try to limit yourself to 2 boxes of risk and decide to be wrong instead of fighting. It's a cheaper alternative, and because you're competing with time, it's going to be a cheaper exit also. It's less problem in the end. Right, so we're testing resistance and we'll see what happens thereafter. If we don't go above '07, so if we don't go and retest yesterday's close up here, it's highlighted as yesterday's close, uh, so be it. I'm positioned to earn my money on the downside. If we do go up above and we break above and we keep on going, to the moon, I'll be losing 1 box at a time, right? Not everything at once. So there's no panic. There's not one situation here where uh, I'm going to be stressed about what happens. It's in my mind, I'm in control. So I'm curious to see what the weekly looks like. That's an important level. Right. So spending money right up here. If it gets back up there, I'll put a few clicks in that top box there, just because I'm eager and I missed it in those last 2 minutes. Slow. There we go. There we go. So if I allocate that 1% to runners and just allocate it to runners specifically, then I'm going to dedicate 1% to box number two. And so if I'm going to dedicate 1% to box number two, right there, right here at resistance is where I'll start spending. And I want to turn on the target. Let's make sure I have a target on that trade. Somewhere here. And sell one more. So now make sure the two targets are together. So I have a half of 1% up here. There's one more. So I allocated 1% specifically to runners, and that so happens to be these trades right there. And now I'm specifically spending 1% that belongs in this box as box 2% number two. And I'm putting that right here. If it goes up, I'll spend percent number three that belongs in box number three and keep uh, the runners open. So I'm managing two books. I'm managing my runners independently from my 2 pips, 2 pips, 2 pips. I'm looking forward. The problem we have right now is the sideways activity. A lot of us want to play, ping or pong. We have to pick one, and preferably the easier one, right? So by picking the easier one, you've eliminated some of your problems, hopefully. Uh, depends on perception. What do you see as a problem? My problem is box number 5. Everything else is not a problem. Right? For others, box number 2 is a problem. For others, it's box number 3. The psychology is where the differences are. Right? It's not in the system. We have to understand where we fail, where we start to slip. We all have our own limits, and organize yourself to operate within that risk envelope. That's where, for me, 4 standard deviation is enough space to recognize something is gone wrong. And by the same token, 4 standard deviation is an average move, right? So it's actually a little bit bigger than average. Right? So now it's time, and I spent my percent. It belongs in that box. I'm just now relying on time to pay me. We'll have to wait and see, right? It's a matter of moving 2 pips when the bars are less than 2 pips. Still testing that resistance area. Right, we're still in that zone up here, having a tough time breaking through. Ultimately, I'm still looking for something like this. If we see it on the 5-minute chart, it should happen through our ladder. Right, so when we have limited clicks and we don't space them out like I just did here, we end up sitting on our hands waiting. If you space them out, you recycle your clicks. You know, if you're efficient with your clicks, you can probably optimize your average yield, your throughput. There's no two boxes that will give you the same, so you have to average this out. You have to, do the best you can with the information you have, and then admit to yourself when things are wrong. Right? So if it pushes up into that upper box there, that'll give me the opportunity to spend the percent that belongs in that box. The idea is to sell from higher. It's really that simple, right? I'm a seller, and I'm a seller because we've made lower lows in time, and it's a matter of time until we make the next lower low. Right? And so the probabilities are in our side, and we know where we're wrong, and then we also know what to do up here. And so that is misleading, right? The truth is resistance will be first. So limit your expectations. If I can just poke above up here, I'll spend a little bit of money. Slow. And the calendar is really light too. It's just Fed speakers with ulterior motives. Right. Ba-da-ba-bum. Those of you that are not building runners or that are not, trying to swing trade for the whole day, recycle your trades, right? Just make your 3 pips, find resistance, sell it again. Make your 3 pips, find resistance, and sell it again. I've been building a longer outlook position, so I'm not really recycling so many trades today as I would have typical. But this is it, right? This is the space where I want to spend percent number 3, right? And so I have to have an excuse to spend percent number 3. What do I see on the 5 minutes? Anything? Right. So in this zone, in this zone is be a good place to add more cells, right? Near the top of the box. Or maybe right around here. I'll put one right there. Solid green candle, right? And I'm selling resistance, right? On my 5 minute chart, I'm selling at resistance. My target is turned on and I'm spending the percent that belongs in this box. There's one more. I have 2 clicks left for this box. I'm going to see if I can put them at the top. Right, so probabilities are that we'll have our turn somewhere near here. If we measure from the low, we're at 36 pips already. Right, this is pip 36 right there, and so we're in the right vicinity to be expecting that rotation that we're seeking. And so I move back down. Right, so if I see another push higher, I'm going to spend my other remaining 2 clicks. There's one. Another push. My break even is now 68, 67, 68, 67, right there. So my break even is 10 pips away, just a little bit over $1. And that's only going to work if I take these and move them out of the way. Right, so now my break even is 68, 67, and anything above 68, 67 is drawdown. And I still have 1 click to spend up there. If I can push up to the highs there, I'll take that last click. Right there. I'll take this and move it down here. And now I wait. If I'm pushed into box number 4, my box number 4, my money box number 4, I'll have the percent that belongs in that box, and I'll be willing and able to spend it before I get my first stop losses. Right, so it's all about the recycling of the margin that I have access to. I'm just choosing to spend it in the upper area. And now that I've positioned myself in time for the UK fix, the bull or bear pullback, all that good stuff, it's a matter of now letting it play out. Right, I built my position in the zone, in the environment that I'm comfortable in, and it's a matter of now watching it come to fruition, right? Watching it evolve and finish the way you planned it. This was the plan. And so let's see if the plan is valid. It's a matter of time now. And if it pushes and pushes and pushes, I fight. And the fight involves losing and recycling, targeting break even. Lose more, recycle more, target break even, over and over and over, right? It's the mission doesn't never changes. So it started out like a slow day, you know, made almost zero money, made no money, 20 cents, but I built a position and now it's a matter of time, right? If we did everything right, if our bias is good and our risk management is good, our money management is good, this should turn out to be an average day. Right? The market, like we said earlier, could try and screw us over, create an outside range like it's known to do. And even that is, for those that know, survivable, right? It creates havoc if your stop losses are too close. But the way we operate, a zone, a space, our space allows us to survive most of these outside ranges, right? So you might feel threatened, but it's not something that you should, you know, panic over. It's survivable, right? It's in the way you approach the problem. How can I solve this? How can I get my way out of this mess? And it's an averaging game, right? It's never a home run. A home run comes with a lot of prayer. So I'm just better off calculating, measuring, averaging, and repeating the same thing. Just look for an average leg, an average move, an average exit. Look for consistency. Uh, I saw someone earlier mentioning slippage. If, depending on the way your account is set up, no, depending on your broker, if you pay a commission, typically you'll have a really tight spread and slippage is negligible. But if you don't pay a commission and you have a variable spread, slippage will get interfere with this every way, every step of the way. And you know, the way we trade, because I'm targeting 2.7 pips, I experience positive slippage more than you might think. Right. So things actually give me more money than 2.7 some of the time. And so positive slippage is not something I've experienced until I started trading like this. Right, so it looks like we may have found that resistance area. All right, so another 3 or 4 pips, another 3 pips, 4 pips. I'll break even. And once I'm below break even, uh, I'll have the ability and the money to do 2 pips, 2 pips, 2 pips, 2 pips, while keeping those runners at the top, right? So once we close some trades here, actually, let's move these out of the way. That way I'll be able to manage manually how and when and what happens to me after break even right here. Right. So I'm just about to start making money and I still have 40 minutes before the top of the hour. And so another push higher may be in the cards. No, for the UK fix, we'll see. As far as I'm concerned, I've built a position, I've spent my money, I've created an environment that should enable me to profit. Time will tell. Come on. A little bump. The anxiety. Anxiety is driving me mad. Breaking even. Oh, gold is in the money also. Right. So, okay. So, considering what's happening, I'm in the money. I'm running. This is now up draw instead of drawdown. If this continues, I will, close some runners. Some of them will be bigger than others. I do have 4% already open. Some of that is spent within boxes. 3% is within the boxes, and 1% has been allocated to runners. Right. So I still have 1%. I still have that fourth box that I have not spent. What if I use it to make 2 pips, 2 pips, 2 pips? Right. So if this pushes up into resistance, if this pushes up somewhere around here, I still have that 1% that has not been spent yet, that belongs in box number 4, right? I know I'm not supposed to borrow from Peter to pay Paul, but in this case, it's actually paying forward, right? It's a winning trade. I'm just recycling that winning trade, basically putting to work the winnings, right? So I'm allocating that 1% because it's already making me money. I'm just recycling that same 1%, except it belongs somewhere else, right? So in my mind, I'm just putting money to work that I have access to. It's not extra risk, right? It's money that I was willing to risk anyways. So here it is pushing into that resistance. There's one click, right? Because I chose at the forefront to use 1% for runners, in total, I should have 5% by the time I'm done. And so I'm 3 clicks away from that. Right. So by the time I'm done spending all of my money, I will have 4% for boxes, 1% for runners, and all of that will have been spent in this space right here, in this zone right there. Right. So it may sound like I'm putting more and more and more weight at the top of the move, right? But in reality, I'm spreading the same amount of risk, except I put nothing in box number 1. And so it is going to be top heavy. It's just the allocation, right? So now I have 2 clicks left for this zone right here. If I start a new box, put it right there on that break right there. Come on. It's magnetized. Right? I'm playing the top of that box here. Come on. Right, so the last 2 clicks that I have access to, I'm saving them in case we go up at the top. Doop, 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 doop. I'll put 1 right there. and I have 1 click left. I'll put it somewhere around here. One click left. Right there. Boom. Okay, and now time of day, we're going into the bankers, sorry, we're going into the UK fix in about 10 minutes or so. And that should provide us with an answer for the following 30 minutes or so. Right, so we're just looking forward outside the box or one box at a time. We're trying to limit our exposure. We're trying to limit how far into the future we're looking for stuff. Right? We're not looking at 50 pips ahead. We're looking at minutes ahead, right? So we're thinking time. And for me, time is what will drive the behavior. Right? This move is an average move. It takes us into the inside swing. And probability of a pullback is right here, right now. That location. Right? If we break through here, we're testing the high. We're testing the outside swing. And it's all normal market behavior. We pick and choose where we trigger the trade. Typically, I want to be at resistance to take the trade, right? I want to sell when it's expensive, and I want to do it when it's most likely going to bounce. So at resistance, just like we did. All right, so let's see what happens at the top up here. Testing yesterday's close is not an uncommon market trick. Right? We'll see that 2 or 3 times per day sometimes. That's one of the reasons why I have it on my chart. I keep it on the chart, yesterday's close. It's a point of reference. Right? So, what do we have now? Right? If it keeps on going up and up and up and up, maybe it goes all the way to 730. Maybe that was the low of the day. Right? It can. There's nothing that says that the impossible will not happen. Right? So it's this thing that we have to be okay with being wrong. I do everything I can to make the probabilities of being right favorable, right? But there still lies that one little chance that, oh my goodness, I'm so far off, right? If I just connect the wicks, we're in that zone. If I just look to my left horizontally, we're already in that zone. We're already there. There's a million different ways of looking at this. You can even put a Fibonacci on here. And we're at 38%. Right? Good place for a pullback. There's a million excuses to trade one way versus the other. And we both, you and I can both trade the exact same thesis with very different outcomes. We could trade opposite thesis and have very different outcomes. There's just no two duplicates. All right, you do the best you can with the information you have, and that's really where we shine. Right, our little boxes allow us to stay in sync with what the market's ability is. Right, the market's ability to deliver an average move, and then once that average move is finished, complete, we expect something, and this is where we step up to the plate, with our spreading of the risk and so on and so forth. That next move, right? This is not going to the moon, right? This right here is not going to the moon. That's the part that evades everyone, right? We're building a position for the outcome. The outcome may be a slightly higher high, right? Just enough to throw everybody off their track, right? Just a slightly higher high is enough to capture a million stop losses and throw everybody off their game, and off we go. And see, now we've crossed yesterday's close. Yay. How many boxes? 1, 2, 3, 4, 5 boxes. Right? Just ever so slightly bigger than normal. Whom am I speaking with next? Oh, I have another hour. Ooh, I have another hour. Okay, so maybe we'll get out of here. As a group, I have another hour to spend together, so we'll see what happens up here. All right, I'm thinking we're gonna be bouncing any second. Four-hour chart. What does that look like? All right, we're still testing the 07s from the underside. We'll see. All right, beautiful. Watch us make a slightly higher high, which we just did, well, ever so slightly. Let's see. This is the part when people give up, right? Oh, this does not work. It's no, it's outside of 4 boxes. Blah 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 blah. Anybody that looks for no a one size fits all system, you're going to be chasing your own tail for a long, 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 long time. You have to be okay with making something work, even if it does not work all the time. And that's what we're doing here, right? We understand what is a normal move. And even if it doesn't work all the time, it's okay to keep going. It's okay to just, focus on the process, focus on the job at hand, and not on what you're about to, no, don't dwell on the drawdown, exploit the drawdown. That's the whole game here, right? I'm willfully spending my money up to a limit, and I'm not doing it because I'm scared to do it, right? I'm doing it because I have a plan, and that plan may be wrong, and I'll know in time when I am wrong, and I have to start booking those losses, right? We don't argue with the market. We just have a strategy that we must commit to. And the commit to the strategy is where people fail, right? They want 100% success all the time. That will never, never, never happen. right? So if even if I take a couple of losing trades right here, I'm still here. I'm still here trading, and I'm still going to continue to trade and very likely recover those losses. Right. So it's because I have this plan, and the plan is using measured moves, and I measure my way through this environment. I know when I've had enough. I know when I've run out of money, right? And I know when I'm about to take my losses. There's nothing that I can change here, right? There's nothing that I can, say, oh, please don't do this to me. No, I created this. I'm willfully participating here. And so if it costs me one or two trades, so be it. It costs one or two trades. I will continue to focus on the reward and not the risk to reward. Right? The risk to reward in our case is an ejection seat, and it's there in case of outsized moves. What we have, the real issue that we're going to have is over time we kind of we forget the bigger picture, and we're so focused for our little couple of hours per day, we forget that we're actually building this bigger picture, right? And just for the sake of curiosity, when you look at that bigger picture, when you look at a weekly scale, certain, what was last week, outside bullish, right? Outside bullish, that's on the weekly scale. And this week we've tested support. So there is a probability, there is a chance that the euro is trying to go up, right? There is a chance that we'll be selling the euro from higher, from 08s or even 09s, right? But this is on a weekly scale, and we have to deal it one day at a time. And one day at a time, we made a lower low. And right now, as we speak, we're trying to make a higher high. Right? We're just attempting to make a higher high. We'll see. Right? It's that bigger picture. We are building the weekly candle one day at a time. And we're building one day at a time, you and I, a couple hours at a time. And so it's this idea that we have the right zone, we have the right methodology, we have the right sizing. We just need now the timing to line up. And that's kind of how we use time of day, right? The UK fix, the banker's close, all of those events generate a probability for us. And that probability is exploitable. Like right here, right now, UK fix, I'm hoping this is the top, right? And if it's not, we'll be making higher highs from here, right? It's theoretically the right area to see a pullback. Yay. No, we did 40 pips below the close, and we did 9 pips above the close. I have my first stop right on the edge of box number 5 from the low. So that's box number 4 for me is right there. 1, 2, 3, 4. Yep. So now let time play out. And if we did our work properly, if we stack the probabilities the way they typically would play out based on the information that we have, the likelihood is a move back down, right? The next move, the probability of the next move is this way, right? The low, a low probability is that way. And so this comfort, no, I have to have comfort in this area. I can't be stressed out about what's about to happen here, right? I have to be okay with what I undertook, with what I the area that I built my trades in was acceptable to me at the beginning when I started to build these trades. And so there's no reason for me now to regret what I did. Right? I have to be conscientious that this might not work and it could go all the way to 730, right around here. Right around here. Right? But that's not the way to the moon. It's partly there, but it offers areas for bouncing along the way. And that's kind of what we do, right? We know there's exits along the way. Right? There's no reason to panic. 15. Yeah. You see, with having a light calendar, the light calendar kind of takes away a lot of the volatility that we normally have to deal with. When it's just a bunch of speakers, you have to really expect the unexpected, right? You never can tell why they all come out in droves and they all start speaking all at the same time. These bond auctions are really important to us, not to you and I, but to the US dollar. And that really will set the stage for what we're going to come up against, tomorrow and the day after. But this is our problem, right? They they're all going to be speaking in concert. They're all going to have a similar, spiel, and we have to read between the lines. Yeah, it does look overextended, and if you just do your Fibonacci work, uh, you'll see 61%. 61% is the likely rest area, so about 3 boxes. That's the norm. That's a normal move, right? So we expect this. And if that fails, so we take one or two losses, we're not losing everything. We're losing the overextension, the one little part, the one little bit that the market did beyond our expectation. It's theoretically a low probability, right? It should not happen that often. The moves are 4 boxes or less. When it's a 5 box move or 4 or more boxes, something is happening. There's a reason for this. There's an expectation out there that warrants that kind of volatility. I don't know what that is. I don't like, I don't know why everybody's clicking their mouse. I click my mouse for my own reasons, right? So, and I know in this area here is a really good place for that pullback, that reversal, that turnaround that I'm looking for. We're just in the right zone, right? And we cannot lose um, everything at once. It's not going to go soup because there's nothing on the calendar that tells us it will go to the moon in one candle. Right? And so we prepare for the environment, we structure the environment, we account for the environment, we account for the moves We have an expectancy. You know, if I stack up my boxes properly, I bet you it's dead on the pip. Like we're right there. Right? And so this is all the problem we have is if I takes a couple of my trades out, my brain will go, oh shit, I lost money. And so immediately I'm stuck in the past. I'm stuck on this money that I just lost instead of looking forward on how I'm going to make the next 2 pips. Right. So the next 2 pips to me is more important than this stop loss that's hanging out there. Right. That stop loss is an ejection seat because that very, very first trade is still hanging around. And you can see I was making 2 pips, 2 pips, 2 pips at the time. That one little trade just barely made it. It barely did not make it. It's like it got tickled, and I'm still holding on to it. And that's about to cost me $17. Right. So it's a non-issue as long as I know why it's happening. And it's, you know, it's understandable, it's part of the thesis, it's part of the process. And because I raise my standards and I don't lose more than 36 pips, I will be losing 36 pips if I have to. Right. I don't move the stop loss. if i if I could, or if I wanted to, I could hedge, you know. And oh, there you go. Oh, that not yet, I'm still in the game. I could hedge, but then that just opens up a second can of worms. You know, it creates 2 opposite trades, which I now have to deal with in 2 different sets of circumstance. So I'm better off sticking to the plan, surviving the results of my, you know, my process. I mean, if we could just look at an average, if you go through a 4-hour chart right now, why is this 4-hour candle bigger than all the others and there's no news? Right. It's like it was said, it was overextended. Right. And that's what we build for. We expect, we anticipate, we structure, we allow. Right. And we don't panic. It's okay, it's okay to experience a little bit of heat. It's built into the system, 4 boxes worth. Right. Too much heat becomes a problem. Let's see. Gold is still coming down. Yeah. Now, I've been wanting to sell from higher all week. I've been wanting to sell from like the 08s all week. I've been unable to even get near there. And so today will be a telltale day. If we can get above '07 and stay above '07, which we seem to be doing right now, right? The next few hours will tell the tale. Ooh, so close. Right, ba-da-ba-bum-bum. Time of day, nine. What is it? 9:10 on my watch here. About 9:10. Yeah. So the UK fix is just starting or has started. We'll see what it brings about. Usually we get bigger bars, right? So the bars will suddenly just expand for the duration of the fix, and then things will shrink back to normal. That might have been it here, these bigger bars right there. And boom, I just took a couple losses. where's my break even now? 68.95. So 68.95, my new break even right here. And that's 21 pips away. And my next trades are quite a ways back. All right. So having freed some money, having freed some margin. Wow, look at the size of that, huh? Big old 4-hour candle, overextended. It itself is bigger than the average. Average is 23 pips, and that one candle is 45. Right? So something, not you and I, but something or someone is maneuvering, posturing. UK fix, you can see the bars are bigger. Right? I'm not spending my money just yet. I'm not recycling my money just yet. I do want to see resistance come in. Right? I do want to see resistance come in, something like this. So if I can get up to that top yellow there, maybe I'll sell. Oh, maybe I'll sell right now, take off the target. I just put one trade. I just put two trades. And now my break even is at 69.20. 69.20. And I'm looking to get back to 22 pips. Okay, so you can see how this works, right? I'm managing to keep 4 boxes of risk open, even though if it costs me 1 or 2 trades along the way, right? At some point, that move we're looking for comes along, and you start recycling your 2-pip trades over and over and over, and lo and behold, that 1 or 2 or 3 losses disappear. No, they get washed away. The idea behind running and keeping runners, like I'm attempting to do, that also helps, make 1 or 2 of those bigger losses disappear, right? But there's no way to understand, there's no way to know that 4-hour candle was going to be a 45 pip candle. It's impossible. And so, you do the best you can with the information you have. You don't change your process. You don't give up. You don't throw away the process. Shit, that process made me $200 yesterday. I'm not going to throw this away because I lost $36 this morning. All right. So it's this, understanding where I'm in, where I am compared to time of day, compared to what's likely going to happen, compared to what bullets I have left, so on and so forth. Right. It's a mixed bag, and it's a different trick every day. So statistically, what's happened to us so far? Let's see. All right. I had 8 winners. I just took 2 losses, and I went from winning $3 to losing 36. Right. My largest loss was the 36 pips. My largest win was a regular, 2.7 pip. Right. Everything was normal today, and I still have this position built. Right. My position is lined up, waiting to make me money. All right. Now, as things progress, either I move towards my stop loss and lose more, so go to the top and lose 1 or 2 more trades, or things go down towards my break even. Break even is the least loss, right? It's the less loss, and then I start to make money. You can see the take profits are on the opposite side of the break even, right? I'm trying to get to this side before I close everything. If it barely makes it there, it's in my best interest to take break even, right? It's in my best interest to exit with the least amount of pain. Yeah. Right. So if I just bring this in really quickly, the the dollar index on the weekly scale had a really bearish week last week, right? Outside bearish candle. The Dixie has a probability of going down, and therefore the euro has a probability of going up. Remember, we saw that a few minutes ago, right? We saw that on the weekly over here, right? But we also have to understand intraday, back and forth, we are testing the proof. The proof is a lower low, right? And so in our approach, we have to follow the facts. The facts tell us a lower low brings with it a lower market. And sure enough, what did the market do right now? It just gave us a slightly higher high and an outside range, just enough to destroy a lot of weaker traders, right? And it wouldn't be uncommon to see it go back down, right? That would be typical, normal, everyday market behavior. If we just put a Fibonacci on what's there now, where have we gone? We're near 61%, right? It would make sense to pull back from here. Move overextended, Francisco was mentioning, that's not far off the mark, right? That's exactly what that is. It's a move slightly bigger than normal, right? Made a higher high, enough to trip up a lot of swing traders that put their stops behind the swings. And in our case, it cost us two little trades, right? But I have millions of trades in front of me still, millions. Right? I'm going to make back these two losers in no time. This idea that I'm recycling the trades, it's because I have the ability to, right? I have the ability, I have the time in front of me, I have the position, and theoretically, uh, the probabilities are now still in my favor. It's the shift, right? There is a shift taking place, and if we don't see it, if we don't stop fighting at some point, you lose that 4%, right? We know where the neighborhood is. We know where those limits are. That's why we're using those boxes. Right? That's why you don't see me, putting 10, 12, 15% at risk. It's a measured environment. Right? The fun part is we don't know why this is happening. Right? There's no reason for that to be happening right now. Unless these guys, hmm, that may have had something to do with it. This right there is what we see twice, maybe three times a month. Sometimes you see it two or three times per day. Right? But that's what our brain has to acknowledge, right? The fact that we have really good intentions, right? We know how the market is supposed to behave, right? It's supposed to hold resistance. And if you make higher highs, it tends to indicate a market that's trending up. When you make lower lows, it tends to indicate a market that's trending down. And when you're stretching those limits, it's an outside range, and it's by definition wrecking your portfolio, right? And so, yeah, this is our worst enemy, and we deal with it layers at a time. Right? We know what the outcome is. We know how to deal with this. It's surviving it that's difficult. Right? There's no catalyst for this. So survive. It's interesting to watch when it just fits inside the four boxes, and then a day or so later it takes, you know, five boxes. Why the difference? Why was it exact one day and so far off the next day? And it's this probability that we use, the assessment that we're using. The assessment puts us at the top of the bell curve. And so we're targeting the top of the bell curve. But on the day to day, specifically like today, it could be on the right shoulder of the bell curve for whatever reason. And we start the day expecting 27, maybe 36. If the market has the intent of requiring and needing 45, it will take 45. And you and I will be on the losing end. That's exactly what happened today. Right? But watch, by the time I finish trading today, that $36 loss will be a positive gain. Right? Even if it's $1. I will continue to trade. I will continue to recycle my wins and continue to, compensate for the overextension. If if you run out of time, pause everything, stop everything, and come back tomorrow. You don't have to make back that $36 today. That's kind of that's the idea. It's okay to lose, and it's okay to not make it all back at once. Right? So, yeah, this is the stuff we're dealing with is the unknown and the fear of the unknown. And in our brain, that is so huge. The fear is worse than the actual problem. Right? So here we are back in the money, you know, moving in the right direction. These trades are winners. I have 4 or 5 of them up there. I only put the 2 up there. I need 2 more. Okay. But the goal is to target break even. If I can exit in this neighborhood here, I'll have minimized my losses. I'll have exited, somewhere where the market has uh, an opportunity to bounce, and then I'll be able to keep trading from that position, right? I don't have to throw in the towel and say, "Oh man, bad day." Oh, it's so far it's been a great day, and it's this idea that I'm okay with the loss, I'm okay with their recovery, I'm okay with the process, I'm okay with where I am. I'm not okay with what happened. Like that's unbecoming of a Wednesday with no news, right? That's the crap we deal with. Yeah. Oh, my coffee's empty. So if we do go lower, no, if we do test the lows, there's probably lows coming. Like it's the bigger picture does not bode well for the euro. Like if you go to the really big picture, the euro is kind of, oops, sorry, the euro is not pushing higher, but rather pushing lower. And considering where we come from, when we look at this right here and this right here, if this was a flag, then this is going to parity. And we've been here before, right? A year ago. And the test of the inside swing probably would be a good place to pause before going higher, right? So take things one day at a time. Take your losses one loss at a time. And the recovery is always 10, 15, 20 trades at a time. It's not one big fat win that compensates for the losses. It's the process that compensates for the losses. My repeating those 2 pips, 2 pips, 2 pips, 2 pips, 2 pips as often as I can makes up for that 36 pip loss. And once in a while, I'll have a 36 pip runner, and that puts me at 1-to-1 risk to reward ratio. Right? So it's limited exposure, limited time, deal with the facts. If the facts are overextended, like today, deal with them. Lose. Right? It's not always a win. And just because I booked 2 losses today, I swear to you, there'll be people quitting this tutorship, this mentorship, just because of losses. This strategy does not guarantee wins 1,000%. It doesn't guarantee shit. And as soon as I book losses like this, people lose faith in their ability and the ability that the system is working. And so I know for a fact people will give up on trading after they see losing like this. And that's too bad. In my heart of heart, I know they'll be back because this system works and it's psychologically easing to do this. It's not so stressful to do this versus some of the other styles of trading. And so, take all the time you need and figure out what your own personal holy grail is. But, if this is it, do yourself a favor. Don't give up so soon. Right? This is theoretically just one of a million strategies. And it's the opposite to what most people expect trading to be. So that's where we lose faith very quickly. It's just not our expectations. So yeah, losing is part of the game. I lose all the time. Right? I try to not lose 36 pips. I kind of let it happen in front of you guys so that you understand that it's theoretically okay. But we want to lose a lot quicker. We want to lose cheap. We want to lose fast. We want to lose immediately. As soon as you know you're wrong, take the loss. But you can see here the stop loss, the ejection seat. It doesn't wreck everything. It just wrecks 1 or 2 trades at a time. And then we don't give up. We understand it's like a layer. We just shedded a layer. It's part of the game. Look how close we came to losing more. Right? So yeah, the problem is we don't all have the same amount of money and we're not going to be clicking all at the same places. And so we're all going to have different outcomes. and how we see the market, how the market behaves, how we expose ourselves to the market, where we spread that risk. It's all going to be different for you and I, right? Average days, average results, average losses. Do, do, do. Yeah, it's the tough part is when we just when we have few wins and then one big loss, it's really it's devastating to our psychology because oh we were on the no I was on a roll, everything was okay. I thought I had it figured out. I'll tell you right now, you'll never have it figured out. I don't have it figured out. Nobody has it figured out. We will never have it figured out. We just have to settle on something that works part of the time and make it work as good as you can. That's it. Our strategy works part of the time and we make it good. We make it work as good as we can. And, like proven right here today, right? I booked losses before I will be booking more winners. It's just part of the game. And it's theoretically easier for me to do this. Right? It's easier for me to lose 36 pips because it's me raising my own personal standards, right? And so I did that by choice. I wasn't forced to do this. I chose to lose 36 and never more. And so I'm really thankful that I'm losing 36 and not 50 or 70 like it used to be, right? So yeah, if I lose 36 pips, I'm on my knees thanking God. I'm really really happy because it could have been way way worse. It used to be so much worse, right? This is all control. It's built with control in mind. If the market is out of control or beyond our control, which it is, this system will knock off at 36 pips, right? It doesn't let you overdo it. Well, it does, but you can't overdo it beyond 36 pips. So right here, I could conceivably close those trades, close those runners, reopen them, recycle them, all that good stuff like we do, here. But I choose to keep them open, right? I'm targeting this yellow line here. I'm targeting this break even. If I can get to break even, then I will close everything. Even if I get within a pip or two of that yellow line, I will probably close everything, the good, the bad, and the ugly. And then do the 3 pips, 3 pips, 3 pips, 3 pips, right? And so it's easy for me anyways to stack up 10, 15 little winners like this. I can recover this very quickly, right? I don't depend on runners to make my money. I depend on cash flow, right? The runners that I'm structuring are because of my expectation with time. I'm here for hours, right? So I'm using hours instead of using a million clicks. So the thesis gives you freedom. Freedom gives you trouble if you don't know what to do with it. And so just be cautious. Be reactive, right? React to what's happening within your limits. Understand that enough is enough. When you've met your match, you've met your match. Not every day is going to be a winning day, and then not every trade is going to be a winning trade. And so it's okay to lose on not I not on schedule, but as per plan, right? You want to lose according to your plan. Don't fight it. The fighting of the loss, the fighting of being wrong is where we lose more. Accepting being wrong is okay. Creating the plan, creating boxes 2, 3, and 4, not giving up the fight, that's because your bias is right and you have conviction in your bias. But even that, you understand where your bias is wrong and you understand where you therefore are wrong. And you have to stop fighting, right? I'm not stopping fighting because I made a lower low on the day. We're just now trying to make a higher high. That doesn't change the whole direction of what I'm aiming for, right? It's just changing things in the moment. So, yeah, give yourself time, give yourself a bigger picture, and you'll do okay, right? So, right now, I'm still waiting for the price to get back towards 6,900, and if we get toward 6,900, we'll flatten everything, and I'll have had a break even day. Okay, all right. So I'll let you guys go and trade safely. As long as you understand you're just here to recycle your margin, you can keep trading and you can make that money back or make more money for that matter, which is what I intend to do. All right. So have fun, guys. Catch you guys tomorrow. Same time, same link, same everything.